Welcome to This Explainer. I am absolutely thrilled to have you here today. If you're a focused learner looking to cut through the corporate noise and get straight to the facts, well, you are in the perfect place. Today, we're going to walk through a highly structured breakdown of WD-40's massive Q3 FY26 earnings results. Yes, I'm talking about that same magical spray sitting out in your garage right now, the one that literally fixes every squeaky door. We're taking the raw data, the charts, and the management commentary, and we are demystifying exactly how this household name is quietly running a massive global growth engine. Okay, let's dive right into this because this headline number is exactly what you need to see first. WD-40 reported a massive 24% year-over-year jump in net sales, reaching $195.1 million for the quarter. That is a total blowout number, and it immediately tells us that this isn't just some stagnant legacy company resting on its laurels. There is serious momentum happening here. So let's unpack exactly where that momentum is coming from. To do that, we're going to peel back the layers logically. First, we'll hit the Q3 financial highlights. Second, we'll map out their global sales growth. Third, we'll look at a decade of growth. Fourth, we'll dive into what they call their 4 must-win battles. And finally, we'll wrap up with their long-term aspirations. All right, kicking things off with Section 1, Q3 FY26 financial highlights. Zooming in on the profit margins here, yes, we see that 24% jump in net sales, but crucially, gross margin actually expanded by 40 basis points to reach 56.6%. And because they grew sales while expanding margins, the bottom line absolutely exploded. Net income hit $30.2 million. That is a staggering 44% jump compared to Q3 of the previous year. This right here is the absolute textbook definition of operating leverage. When you have a highly scalable product, every extra dollar of revenue just costs less to generate, which aggressively improves your overall profitability. And honestly, this brilliantly illustrates what that corporate leverage actually looks like in the real world. Behind all those high-flying, abstract financial metrics is just this physical reality, the iconic blue and yellow can. The simplicity of this product, a proven chemical formula inside a highly recognizable, mass-produced aerosol can, is exactly what allows WD-40 to scale so effortlessly and crank out those massive 56.6% gross margins we just saw. Moving right along to Section 2, mapping global sales growth. So where is all this money actually coming from? Well, globally, the Americas are still the heavyweight champion, bringing in $101.2 million. EMEA, which stands for Europe, India, the Middle East, and Africa, pulled in $66.6 million, and the Asia-Pacific region, or APAC, accounted for $27.3 million. But the most important takeaway here isn't just the sheer scale of the Americas, it's the fact that WD-40 achieved double-digit percentage sales increases across all 3 of these regions simultaneously. This is a highly diversified, truly global operation that's just firing on all cylinders. Let's look a little closer at the Americas segment. Representing 52% of total global net sales, this region is an absolute powerhouse. Total reported segment sales were up 29%, driven in an incredible way by the classic WD-40 multi-use product, which jumped a massive 34%. We're seeing some huge maintenance product growth here, with US sales up 35% and Canada up 33%. A lot of this was actually fueled by a high-impact promotional program in the United States, which really proves that strategic marketing still yields massive returns, even in their most mature market. Now, shifting over to the EMEA region, which makes up 34% of global sales, overall segment sales here were up a very healthy 17%. But the strategic growth is what's really fascinating. WD-40's specialist sales surged by 31%. They are successfully upselling these customized products. Also, you might noticeably see that home care products revenue is sitting at exactly $0. That's actually on purpose. It reflects the recent, highly intentional divestiture of their home care and cleaning brands in this region. It allowed management to make a clean break and focus entirely on their core, high-margin maintenance products. Finishing up our global map, we have the Asia-Pacific segment, making up that final 14% of global sales. Overall sales here were up 24%. But the standout metric? China maintenance product sales absolutely skyrocketed by 42%. And even their established market in Australia posted a really solid 18% gain. So yeah, APAC might be the smallest slice of the pie right now, but those staggering growth rates, especially in China, show immense future potential. That brings us to Section 3, a decade of consistent growth. So, the natural question is, was Q3 just a one-off fluke? Well, looking at the historical context, no. We are clearly looking at an enduring, steadily compounding business model here. Just look at this steady climb in maintenance product net sales. Back in fiscal year 16, they were at $327 million. By FY19, $387 million. FY22 hit $480 million, and by FY25, they reached $591 million. It's basically a staircase. This visually represents management's ability to consistently generate value year over year, completely shrugging off economic cycles and just continuing that upward trajectory. So the crucial point is, when we break down that 10-year trajectory by region using the compound annual growth rate, or CAGR, the story gets even more interesting. While the Americas bring in the most absolute volume today, the EMEA region has actually been the fastest compound grower over the last decade at 7.8%. APAC follows at 6.6%, and the Americas are at 6.0%. This clearly tells us that their international expansion strategy has been quietly yet massively succeeding for a very long time. Next up is Section 4, the 4 must-win battles. So, what are the strategic gears turning behind the scenes to keep all this going? The foundation of everything WD-40 does relies on the people who use the product daily, the mechanics, the tradespeople, the DIYers. Management explicitly states that their strategic enablers prioritize a people-first mindset to build an enduring business for the future. Basically, their corporate goals are deeply, inextricably tied to end-user satisfaction. Let's see how this builds into their actual operational framework. Here are their 4 must-win battles, but let's translate that corporate jargon into clear, actionable goals. Number 1, lead geographic expansion, meaning get the can into more hands worldwide. Number 2, accelerate premiumization. This just means raising prices and margins by offering better, more convenient delivery formats like the Smart Straw. Number 3, drive specialist growth, selling targeted high-margin formulas straight to professionals. And number 4, turbocharge digital commerce, crushing online sales so you can easily buy it right from your phone. And we can instantly check if this strategy is actually working right now. The Q3 data provides immediate proof of concept. Just look at the execution here. Premium packaging formats like the Smart Straw and Easy Reach were up 19%. WD-40 specialist products were up 22%, and e-commerce sales also up 22%. Their investments in premiumization and digital commerce are already yielding roughly 20% growth. They're literally executing this battle plan flawlessly. Finally, let's wrap things up with Section 5, long-term financial aspirations. Now, what's really interesting about this slide is seeing exactly what WD-40 aspires to look like in the years ahead. Based on their target future footprint, they aspire for the Americas to represent 48% of global net sales, EMEA to grow to 37%, and APAC to expand to 15%. They clearly expect the international markets to take a noticeably larger slice of the global pie as their geographic expansion continues to accelerate. And to get there, these are the ultimate corporate guardrails they plan to operate within. They're targeting mid to high single-digit net sales growth on a compound basis. Most importantly, they intend to maintain a gross margin target of 55% or higher. And impressively, they plan to do all of this with incredibly low capital requirements, spending only 1% to 2% of net sales on capital expenditures. High growth, high margins, low costs. It's just an incredibly efficient financial engine. Which leaves us with this final thoughts. Management actually estimates they have a long-term growth opportunity runway of roughly $1.4 billion globally, based on their market benchmarking. When you contrast the everyday, physical simplicity of this product with the massive multinational financial machinery we've demystified today, you really have to ask, with a $1.4 billion runway ahead of it, just how big can this simple can of lubricant actually get? It is a fascinating question to ponder. Thank you so much for joining me for this explainer, and keep learning.